rating outlook is stable for the industry. 2014 was the first year where many aspects of the Affordable Care Act came together. So we had the first year of health insurance exchanges, guarantee issue for those, especially for those enrolling on the exchanges. We've had the health insurer fee, the non-tax, which is also non-tax deductible and impacts earnings, Medicaid expansion. So there's been a lot of things going on in 2014. Overall, health insurers' earnings have remained favorable. In addition, most have remained adequately or more than adequately capitalized for the level of the rating. That said, some of the larger publicly traded health insurance, especially the largely publicly traded health insurance companies, have been growing not only in the insurance space, but also in the non-insurance space, so non-regulated but health-related. Things like systems, private exchanges, pharmacy benefit manager, things like that that work along with, possibly along with health insurance or are health-related. And as such, some of that growth has, and the earnings coming from those operations has helped to offset some of the declining margins on the health insurance side. And as such, AM Best may consider some positive rating movement for some of those carriers. In the near to midterm, we expect earnings to remain favorable. Although margins are impacting earnings, margins are coming down. So earnings are coming down. We're sort of viewing this as a reset because a lot of the things that are happening with earnings are related to the Affordable Care Act. So they're not things that are going to change or go away immediately. I mean, it's just not going to happen unless the Affordable Care Act is being repealed. There's been more membership growth in the government-funded space, Medicaid with the Medicaid expansion, Medicare with the growing senior population, and those are lower margin business than commercial business. Additionally, we're also seeing commercial business shift from fully insured to ASO, and that is also lower margin. So earnings are still expected to remain quite favorable, but just come down a little bit in the margins. It seems to be running better this year than last year. We don't seem to have as many system issues. The unknowns is going to be the enrollment. The other thing is, carriers sort of repositioned. 2014 was the first year. So in 2015, some carriers expanded their markets, and by markets, it could be a county. So they could have expanded into more than one county in a given, into additional counties in a different state, or expanded into additional states. Some may have exited a market, and we've seen some shifting across the board.